value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Skarica, founder of the Addicted to Profits newsletter online at addictedtoprofits.net. He also writes for the Financial Intelligence Report. He's speaking to us from the Bahamas. Welcome back to the show, David.
Yeah, thanks. But I will make you jealous. It's probably late 70s, sunny, breezy. If you do come to the Bahamas when all this COVID crap is over with, I always actually recommend November, because that's kind of the transition between our hot summer and the winter, where sometimes you can't get some cold fronts here, and it's maybe not the greatest for vacationing, but November is, to me, the most perfect month. You know?
In Vancouver right now, it's 7 Celsius, 45 Fahrenheit, and it's so foggy and gloomy. The street lights have remained on all day.
Yeah, I've been to Vancouver a few of those kind of days. Guess it's not snowing is about the best thing you can say.
We have lots of snow on the ski hills, but I don't know if people are allowed to use it.
David, actually, by the way, being Canadian, I can tell you one thing, that when it snows in Vancouver, a lot of, maybe you're excluded from this club, but a lot of Vancouverites cannot drive in the snow.
No, they cannot. For us prairie kids, it's funny to watch them try. David, the stock market still seems to be one of the bright spots out there when everything else is gloomy. Why has it been so positive?
Well, I think there's a few things. I think one thing that no one kind of talked about, which I think could have been on the table if Trump would have won, is, we've seen this huge consolidation of power in in big tech, and the whatnot, in the last few years, the Amazons, the Googles, et cetera. And I think that at some point, and it may now take 4 years, Biden in power, the Democrats in power, they're going to get broken up, similar to Standard Oil, back when Teddy Roosevelt was, president. And if you go look at what happened with COVID, is they even got more power, right? Because, I kind of always order from Amazon anyhow, because I live in the Bahamas and I live in a smaller island that doesn't have a lot of big stores or shops or the whatnot. So, I kind of tend to, if I need something, I'll go on Amazon and the whatnot to order something, or, we all use Google for searches. But if you look at a company like Google, Google has YouTube, which is, especially with all the shows now that they do on YouTube as well, it's kind of like a Netflix type service. Plus you've got the search engine, plus you got the cloud. YouTube could easily be broken up into 3 or 4, different companies, right? Before any of this, kind of stuff happens, right? So, in terms of, and then not be as dominant in a lot of these areas. And I won't get into every other company in detail, but, they all can be that way. So I think, there's a bit of a relief rally in those tech stocks, because they've been up so huge. That's if you go look at their donation list, they donate to Democrats like crazy, right? So it's we're not going to we got 4 more years scot-free of not being broken up, because just the Republicans won't touch, say, oil and gas companies, because that's kind of their bread and butter, or banks. The Democrats aren't going to touch these Silicon Valley companies. So I think there's a bit of a relief in that. And then I think there's a lot of looking forward to, thinking that even if the Republicans win the Senate, I think one moderate Republican in the Senate would probably come over to a big stimulus package, especially if, because of the lockdowns and the second wave of COVID, if we see a big slowdown in the economy. So I think the market is also kind of looking forward to this stimulus. And I think there's a really unique trade going on right now too, is that there's a great book by John Kenneth Galbraith, the old, economist. And it's about, it's called Short History of Financial Euphoria. And it's about all these, like, blow-offs and, moves in the stock market, bubbles going back to the tulip mania. And one thing he talks about is that you look at the 29 crash, 87 crash, and I guess you equate this to 2008 as well, or even make it earlier this year when, even though the markets came back so fast, you did have an almost 35% drop in the stock market. Then most of these crashes have happened under Republican administrations, because under Republican administrations, Republicans tend to be kind of maybe more capitalistic, more into making money, and they start believing, oh, America's great, and the boom is going to go on forever, and people get overextended and blow themselves up. Where now I think, ironically, that this is kind of happening under a Democratic administration, because a lot of people that are speculating in these very kind of tech stocks I'm talking about, these stocks that are going to lead the market, are actually millennials who really have poured into the market, and most of them, most young people tend to be more liberal and the whatnot, and they're kind of like thinking that, oh yeah, Biden won, this is great, they're going to be spending on green energy and doing, and doing whatever, and the orange man bad is gone, and I think it's kind of ironic, 'cause I think one thing that may ultimately cause this next blow up and then, kind of crash in the markets is this kind of trade where now it's actually the liberals who are actually in this euphoric trade rather than the conservatives for once. Now that I don't know how long it could go on. Maybe it'll go on forever. Maybe it's one of those things that will just end right away, especially when there's probably a W-style recession because of these second lockdowns in COVID, depending on and I definitely think we're going to get a big downturn, I would say by the end of this term in the administration, because I think there's going to be so much deficit spending, the price is going to be paid for that probably a lot quicker than people think.
My previous interview here with Danielle Park, she said it usually takes about 4 years to get back to the jobs you had before a major depression or recession hits. In other words, this market crash would happen just as people thought their jobs were safe again.
Yeah, and the Great Recession took a little longer. And then remember, the whole thing with jobs is always a little dicey right now because and the reason being is I think it is kind of dicey right now because the participation rate in the States, even at the top of this economy earlier this year, was so much lower than it was, at the market bottom, at the market top in 2007. The unemployment rate was a lot higher than what they're saying, and that's the same thing now. I think in the States, the unemployment rate, and we'll get another report next week, is back down to 6.9%. But again, if you go like that participation rate has crashed again because, a lot of people have just dropped out of the job market, COVID. And if you see like the lines for food stamps and the whatnot, in Texas and some of these places in the States, that things aren't back to normal. So I think that's another thing about the job thing is that even if, in 2024, they're going to say the unemployment rate's 4 or 5%, it will probably really be a lot higher than that because a lot of people have just dropped out of the job market,
Plus, in Canada and the U.S., we have a limit for how long you can draw unemployment benefits, and then you just disappear. You don't exist anymore once your benefits
you go
run
on
out.
welfare, which is still like a form of government assistance. So you go on welfare, and then you're collecting money, but you're not in the job market. And that's actually, when that participation rate really drops, that's probably more negative than unemployment going up because that's when people are just kind of giving in and throwing up, giving up and throwing up in the towel. And then, by the way, if you kind of look at those numbers that we're talking about with the participation rate, it's not like the over 65 baby boomer crowd that's been dropping out because, you would think, oh, they're going to retire. It's actually the millennials and the Gen Z people because there isn't that great, they get out of college and they're college educated and they want to get a good job out of college, right? They don't want to go do the Mick jobs or, the fast food jobs and the whatnot. So, that sort of thing also, right, kind of, pays, the price and the whatnot.
We'll have more with David Skarica right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're talking with David Skarica. David, what's going on with Bitcoin?
Well, we've seen this huge move, and Bitcoin's kind of got a double top right now because it sold off that top with the late 2017, early 2018 top. And what I find interesting about Bitcoin is I do think there's merits from it. I think the technology behind it is fantastic in terms of like living in the Bahamas and offshore. I have to do a lot of wire transfers for, business reasons, investment reasons. And, you look at the SWIFT codes and IBAN numbers and you're just like, this seems very antiquated, right? Like, why are we still doing this in the 2020s? And, so the great thing is, how it's like I can send money from, your Bitcoin account to my Bitcoin account. Boom, it gets there almost instantaneously. So I think, that type of two-tiered system is fantastic, but I've always wondered, like, I don't know if I'm a big believer in it's a store of value, right? Because, all they did was invented some digital currency, say, oh, it's limited in the number that, can come out. And couldn't you do that with anything? Like, couldn't you do that with, I don't know, if you were growing trees? Say, well, we're only going to grow 100,000 trees in this area, and I guess it would make the trees go up in value, right? Because there's a limited supply and would bid them up. So, but, it's not like gold where there is actually a limited supply in the ground physically. It's kind of like a made up limited supply. So I have a bit of an issue with that, but I think the issue is because you can't really technically print anymore, right? It does have, I guess, a little bit of value because guess what? Governments can't print anymore and the whatnot. So, and they're printing a lot of currency right now. But anyway, with this, what I find interesting about Bitcoin though, too, is again, tends to be the same younger, millennial type people. Although a lot of smart people like Paul Tudor Jones, like Raoul Pal at Real Vision, or Stanley Druckenmiller have taken small positions in Bitcoin and say it's headed a lot higher, which it probably is in a money printing environment. But what I find interesting, again, go look at late 2017. Go look at now. What's the similarity? Gold has been pulling back since the summer. Bitcoin has been surging while the stock market has been surging. I really believe that Bitcoin is more right now a speculative type financial commodity that's going to rally with everything else rather than decline.
We'll have more with David Skarica right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with David Skarica. David, do you see crude oil coming back or staying strong this year?
Well, the one thing I should just get back to the Bitcoin comment. I mean, Bitcoin is rallying with financial assets. That's what I meant to see, right? And I'll see, and I said rather than decline, I meant it will decline when financial assets decline. I don't think it's this kind of hedge, to doom and gloom like a lot of the Bitcoin people portray. It's an extension of equity and liquidity bubble. Anyhow, so with the crude oil, I'm kind of neutral right now. I do think again, we're talking about supply, right? What's happened is the Biden victory is negative for Canadian oil supply because there probably will not be a pipeline, built into the United States, right? That will probably have to wait 4 years now. So that kind of limits supply coming out of Canada because a lot of that oil in Alberta is landlocked. And then, as we've seen with Mr. Trudeau in Canada, if it doesn't matter if the Republicans take over the Senate, Biden can do all kind of taxes and regulations and the whatnot, kind of restricting, oil production, especially because he's going to move more to the kind of the green movement, et cetera, in the next few years. So I just think that, we're talking about that restriction of supply plus the money printing plus the money printing plus emerging economies are going to recover stronger, I think, post-COVID than than that developed world. So I think then this will get demand. And I don't really care about the green arguments. It's like, Asia, China, India, the rest of Asia, the places that are growing fast, they're still going to be buying oil and gas, et cetera, right? So, I think that once you get the demand coming from then, plus that I don't think the U.S. Supply will boom like it did in the last 10 years with the new environmental restrictions about to happen under the new administration. So that's restricted supply, more demand in a recovery, and money printing, which is inflationary by nature, which is going to push prices up. I think oil and gas will ultimately be higher, but for a stock investor, you have to look at where do you want to be invested. I think you want to be in the kind of more offshore companies, like, places like Brazil, Russia. They're still going to be very, very energy friendly, not like maybe North America right now. So I think you have to be very selective as a stock picker, and those kind of companies have to, that are domestic, have to be the dominant players. Because, like, for example, I'll give you two companies, like large caps. Like, I think Suncor would be good in the Canadian because they'll take over a lot of the assets of companies that kind of fail, that can't deal with the regulations. And there's EOG is one of the big frackers in the States. And I'm not a huge fan of fracking because of the limited amount of resources and the amount of capital it takes, but that's a pretty well-positioned company, and they're in the Dakotas, which is, very friendly towards energy. So again, they could take over properties and companies that kind of can't survive in this environment. So you want to get into those companies that can survive, but there's a million companies in Brazil, Russia. Again, these kind of, like I said, the developing or whatever emerging economies you want to call them, are energy-based economies that are not going to shun oil and gas, and I think they could really, really benefit from the kind of the next move higher. And that's kind of what happened in 2000. Like maybe in the last 10 years, a lot of the frackers kind of led the way in oil and gas, but in the 2000s, it was really those big, large cap, like Suncor, oil sands, or develop, a lot of the Russian companies, Petrobras in Brazil, et cetera, that led the way. So that's what I'd be looking at right now. And by the way, the great thing about these Russian companies is they pay these monster dividends. It's actually just writing an article for Financial Intelligence Report that, the deadline was today, Thanksgiving Day as we're talking. And Lukoil pays a 14% dividend, which is, ridiculous, right? So I really think you can get some good value there,
David, thank you so much for chatting with us.
Okay, man. Thank you for having me.
My guest has been David Skarica, founder of the Addicted to Profits newsletter, online at addictedtoprofits.net. If you have any questions for David or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. We apologize for the wind noise in the background as Dave was reporting to us from a windy beach in the Bahamas. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.